And so that's what the Fed is allowed to buy. It's illegal for them to buy stocks currently, but they've figured out a way to around it, and their buddies are going to get rich off of this. It's great for everyone except you. Well, the stock market remains insane. I'm going to get right to the news. This 15 years of wiped out, but jobs are still overstated. I'm going to be covering some of these stories. I just wanted to point out, I'm not going to cover this one. Odds of another recession this year are pretty high if Congress doesn't pass more aid. And this is by the chief economist at Moody's Rating Service. And when I read this, I realize that he doesn't have a very good grasp of economics. We're going to be in a depression. It's not going to be a recession. But he says if Congress doesn't pass more aid, we'll get into more of that later. But passing aid just dilutes the currency supply. It's not creating any more real wealth, goods and services. That's the real wealth. You create more dollars, which is the measurement tool of those goods and services. And there's more of these measurement tools, so your dollar is basically measuring a smaller piece. That's called price inflation when they do that. But it also causes wealth redistribution, and we are going into a period of time where velocity is slowing down, and as velocity slows down, we have deflation, even though they're inflating the currency supply. It's very complex, but I'm just going to get into the news here. Definitely read this one. This is excellent. A Crash in the Dollar is Coming by Stephen Roach. And Stephen Roach is somebody that I do respect when it comes to his knowledge of economics and so on. But if you read this article, what he's saying is what I've been saying in my presentation, The Death of the Global Dollar Standard, that I've been giving for a decade now. And he's giving sort of a very recent update and some very good analyses of why the dollar is no longer going to it's no longer going to enjoy its exorbitant privilege. And that privilege is that it's the world's reserve currency, so we can print dollars that our debt is denominated in. No other nation can do that. This allows us the enormous trade imbalances and all of the deficit spending that we're able to do. It's also a wealth transfer from the rest of the world to us. It's like a tax on the rest of the world because a lot of the U.S. dollars, half or more, exists outside of the United States. And if we inflate more dollars, it doesn't just dilute the ones inside the United States. It dilutes all dollars globally. And so if it devalues all of the dollars globally, it's transferring purchasing power from the rest of the world. You know, half of the purchasing power, that whoever gets those new dollars first gets the stolen purchasing power from the dollars that are in existence. If half those dollars exist outside of the United States in the rest of the world, then 50% of the stolen purchasing power comes from outside the United States. That's one of the reasons that we've had this extraordinary standard of living that we've got in the United States. The next article is from Mish, and he's always great, good to read. 15 years wiped out, but jobs are still overstated. And what he's talking about here, if you look at the amount of jobs out there, the growth in jobs, you see this pullback in 2008, the global financial crisis, and then this huge run-up that we had, then this little angled top, and this huge crash. This is all monthly data. And so this little angled top is the very end of the first quarter, most likely, and then this huge crash, and we've had a little rebound. However, in this article, he shows that 2 months ago, the Bureau of Labor Statistics, the BLS, I like to call them the BS, and the National Bureau of Economic Research admitted that the job estimates were overstated, that they miscategorized a lot of people, and that the actual amount of jobs was far lower than they had estimated. Now, this isn't unemployment, this is employment. So the number of jobs was far less than they were reporting. But they said, we're not going to change the charts. We're going to leave the statistics just as they are, even though we made it a horrible error and hugely overestimated the number of jobs that there are out there. And then guess what? They did it again this month. So and this is what the article is about. For the second time, they've miscategorized the same number of people, basically, the same percentage. So I'm going to move on. I want to show you a chart that I just generated, and it's of GDP. And you'll notice that same pullback in 2008 of GDP, so the size of the economy. And then it goes up here, and we've got a little tiny pullback, an angle on the top of this. Now, this is quarterly data, though. And so this angle, GDP was positive until the second half of March. So this is just the last 2 quarters of the last 2 weeks of the first quarter that caused the whole first quarter to go negative in GDP. And if you look up here, this is from May 28th was the last time they updated this, and it's updated quarterly. So it took from the end of March until May 28th to compile and give you this data, which means we've got 11 more weeks before they come out with the next gross domestic product chart. But guess what? It's going to look like this. I'm sorry. I'm like I say, if you can't laugh about it, you got to cry about it, and I'd rather laugh. They just keep on making all these stupid mistakes with what they're doing. They don't really understand economics, but here's that same contraction in the global financial crisis, and there's a little, but this is monthly, not quarterly data. There's that little angle and this huge crash. So this is what we've got to look forward to, I believe, with GDP. Another article that I believe everybody should read, Pent-Up Demand Won't Save Us from Economic Destruction. This is on the Ludwig von Mises Institute, and I highly recommend reading it. Ludwig von Mises Institute tends to be a lot more technical, so some of it speaks over the heads of the readers. But Harry Dalton here does not. Everybody should be able to understand this. It's very, very good, and it's just saying why this big recovery isn't going to happen, why the government can't just turn on the off and turn on the economy like it was a stopwatch. Very good article. This one is a definite must-read. Wall Street on Parade. BlackRock authorized the bailout plan before there was a crisis. Now it's been hired by the 3 central banks to implement the plan. And guess what? These are the people that authored this new thing on BlackRock. They all work for BlackRock. This is Stanley Fischer, former Federal Reserve board member. And he's from the Swiss National Bank, their central bank, and he's from the Bank of Canada. So these people are in the revolving door, going from the private sector, working for big financial firms and having big payrolls and big commissions and big bonuses, going and serving with central banks and having the central banks now as buddies and financial firms, and then going back into the private sector. They're the revolving door people. They're in the private sector with their influence on the central banks. And what has happened here is, I'll skip further down in here. The BlackRock plan further explains why, for the first time in history, the Fed has hired BlackRock to go direct. That's the name of the plan, go direct, and buy up $750 billion in both primary and secondary corporate bonds and bond ETFs, a product of which BlackRock is one of the largest purveyors in the world. Adding further outrage to the BlackRock-run program, BlackRock will get $75 billion of the $454 billion in taxpayer currency to eat the losses on its corporate bond purchases, which will include its own ETFs. which the Fed is now allowing it to buy in the program. So the Fed is creating this currency. The 454, that comes from taxpayers from the Treasury and is given to the Fed for this program. The Fed then uses a fractional reserve and expands upon that, and they can make earlier in the the article, it says 4.54 trillion bailout plan. So the Treasury gave them this. The Fed just creates the balance from nothing, deposits it in their accounts, and they get to buy their own ETFs. So they are both the buyer and the seller, and they're making commission on both ends of the deal. It's like the Fed creating a bunch of currency and saying, okay, we're going to pay you to buy a house. Open up an account, and you do. You they deposit brand new currency into the account that didn't exist before, that's stolen purchasing power from other people because it dilutes the currency supply. You get to buy the house with it, but you're also the realtor. And you get a commission on buying the house. And you also own a house that you're selling, and so you buy the house from yourself, and you're the realtor representing the seller, which is yourself. And you get a commission on that end. This is just hilarious. I can't believe it's being done, but this is going to cause a further income inequality, and the social unrest will only increase in the future. One feature of the Blackrock Plan that is certain to get wide public pushback in the U.S. is the proposal for central banks to buy stocks, equities. The authors of this plan write, any additional measures to stimulate economic growth will have to go beyond the interest rate channel and go direct, that's the name of the plan again, with a central bank crediting private or public sector accounts directly with currency. They call it money, currency. And so the central banks create currency that didn't exist, credit these accounts, and then one way or another, this will mean subsidizing spending. And such a measure would be fiscal rather than monetary by design. Now, what they're saying there, fiscal, it's the government that creates fiscal policy. It's the central banks that create monetary policy. So this would be on the government side. This can be done directly through fiscal policy or by expanding the monetary policy toolkit. Ben Bernanke used to talk about the monetary policy toolkit, and he used to talk about expanding the menu of assets that the Federal Reserve can buy. That was way back in 2002, and I based my book and my entire life off of what he said in that speech back in 2002. Deflation, making sure it doesn't happen here. With an instrument that will be fiscal in nature, such as credit easing by way of, wait for it, buying equities. So they've created this thing so that the Federal Reserve can do what is currently illegal for the Federal Reserve to do. They cannot buy equities. They're only allowed to buy government-backed assets, which means bonds and mortgage-backed securities that the government has purchased. And so that's what the Fed is allowed to buy. It's illegal for them to buy stocks currently, but they've figured out a way to around it, and their buddies are going to get rich off of this. It's great for everyone except you. Next up on the list, the Fed really needs to look at this chart, deflation ahead, and this is from deflation.com, and I've never seen this chart, and it's a great one. So this is the M2 velocity. So the M2 currency supply, how quickly is it changing hands year over year? And it's a measurement of it as a percentage change year over year. And you can see that the percentage, it's on this scale over here, has just absolutely fallen off of a cliff. And this is probably last month's data, or it may even be, actually, it looks like it's probably quarterly data. So this has not been updated. It's going to fall further. But then they've got it with U.S. Core Consumer Price Index. The Core CPI is the consumer price index that measures inflation after they strip out food and energy. So it's not a real measure. If as long as you don't buy food or heat your house, this is the measurement of inflation that you use, or fill your car with gasoline. So if you don't eat or go anywhere, and you freeze to death or bake in the heat, then this is the inflation that affects you. But look at the similarity in these and how they track each other with a 7-quarter lead. The velocity of M2 leads prices by about 7 quarters. So we've got quite a few. We've got a bit of time left before prices collapse if this continues to track as true. Now, a tweet. According to Google Trends, searches for how to buy stocks just hit an all-time high by far. This means that the total amateurs who have never bought stocks in their lives, and they're Googling, how do I do it, believe that this is the best time to buy stocks. Yeah, I think I'll do the opposite. Great tweet. And that goes right along with Sven Heinrich's article, Crash Number 2. And this is a great article. It's full of charts, but I'm going to skip down near the end here and go to a quote that he's got. Look for the S&P to turn positive for the year with a boost from the Fed in the week ahead. That's the sentiment that at the moment, and probably the most frustrating aspect of a mania. The most reckless look like the most right, and the most reasonable look like the fools for not chasing stock prices. And that is, it's hard to be wrong year after year. And people say, oh, you're wrong. Stocks have gone up. Gold didn't go anywhere. And that was true for a long time. But we're in this big secular gold bull market. And then inside of that, there was a short-term cyclical bear market, which I can't measure and predict with accuracy. I can measure the long-term bear market, and I do believe that it is not over. The bull market, not the bear market, the long-term gold bull market. And we're about to enter the second phase of that soon. But this end is great. I may well be wrong on this, but the circus-like atmosphere in context of historic valuations, optimism, and giddiness, along with the bears crying, that the bears being in pain, the people that have bet against the stock market, sold their stocks, or gone short on stocks, they're all in pain right now, are exactly the type of conditions that have ended bear market rallies in the previous periods in history. To think that it's different this time is to count on it being different this time. Well, in one aspect, it already is different this time. The first stock mania inside of a recession. Not discounted far below at the all-time highs, but rather sitting on top of the largest disconnect between the economy and the stock market ever. Inside of a recession, no less. And I could not agree more with Sven. And then we've got Robert Breedlove. A human mind can process 120 bits per second. The Fed's 20K employees can process 18 terabytes per year. The world's 7.5 billion people can process 6.8 quadrillion bytes, I guess that is, per year, bits per year. Therefore, the free market is 3,800,000% more intelligent than the Fed. Thank you very much, Robert Breedlove. And Robert, I want to ask a question. When I was a kid, I grew up in Culver City, and there was a Breedlove that lived just a few miles from me. And when he was in his early 20s, he built a car in his garage. I had a model just like this when I was about 10 years old. And he took that car to the Bonneville Salt Flats, and he became the first person in 16 years. He broke the first land speed record in 16 years and became the first person to go 400 miles an hour in the spirit of America. And then he had a crash in this car that was quite devastating. on his run where he became the first person to go 500 miles an hour. And that crash, his parachutes just shredded, and he kept on going way beyond the end of the track at 500 miles an hour, hit an embankment, got airborne, and ended up in this lake. And it's a good thing, because if that hadn't been there, there was an oncoming train, and he would have broadsided a train at 5. This is the fastest accident in history until his next accident. And so that car, they recovered and they restored, and it's in museums today. And then he built another car and went on to become the first person to break the 600-mile-an-hour barrier. And that was in 1965. So in 63, 400 miles an hour, 64, 500 miles an hour, 65, 600 miles an hour. This was one of the most uplifting times in history. This was when the Jetsons were on TV. And I had one of these little models, and the future was so bright. And I just wanted to leave everybody on a high note. We have the potential to still have a bright future. We just have to make sure we don't go the wrong direction. I want to thank you for listening. We'll see you next time.